Sunday, February 9th, 2020, MONERO 64, home of alternative economics and contrarian views. I want to talk about a subject I've covered in many of my videos in the last 4 years since I started the channel. That's the subject of the currencies, the fact that they're all sinking. The fiat currencies, of course, the national currencies that we use in the United States, like the dollar, in the UK, like the British pound, in the Eurozone, like the euro, in Australia, like the Australian dollar. And even before I started my channel, back in 2007, that's when I got the idea to write about they're all sinking. I used to have a blog, forsoundmoney.com back then, and I wrote about that. That was the first time I wrote about that. So how have I known since then that they're all going to keep sinking? And they are sinking. And they're sinking, of course, versus the ultimate store of stable value for the last 3,500 years, and that is gold. As JP Morgan once said when asked what gold was in Congress at the Peugeot hearings, he said gold is money, everything else is credit. So yeah, how have I known that they're all going to sink? Well, because of the simple law of supply and demand. Anyone can understand it. You don't have to be a PhD economist to understand it, even though a lot of the PhD economists don't seem to understand that law anymore. What that means is that under a sound money system, credit is limited. There is a limit. It's anchored to the amount of money in the system, to amount of gold in the system. So yes, there are credit booms and credit busts in a gold-backed sound money system, but they're not as accentuated because under the current fiat currency system, the amount of credit that can be put into the system is almost infinite. Why do I say almost? Well, because there comes a point where that credit is not accepted anymore. There's a revulsion to it. We haven't reached that point yet. So with that, I'm going to look at one currency today that seems to be leading the way in sinking. And it's the currency down under, the Aussie dollar. The other thing it's pointing to is a sharp slowdown in China, and probably also a sharp slowdown in the global economy. Let's look at the Aussie dollar first. Let's look at the charts of the Aussie dollar and gold and the Aussie dollar versus the US dollar as well. The major fiat currency, of course. And it will also show you how gold is the ultimate hedge versus this fiat currency inflation. And by inflation, I mean the inflation of the credit bubble. That's what inflation is. That's what creates the supply, abnormal supply of money and credit. That results, of course, in the loss of purchasing power of that currency. So how does the law of supply and demand work here? Well, gold and silver, they're limited resources. They can't be created willy-nilly out of thin air like the credit. So their relative value increases versus something that is created ad infinitum. It's like if you had 10 apples at a farmer's market and each apple was $1, fine. You know, that's a reasonable price. But if this farmer arrived with 10,000 apples, you could probably get apples for like 5 cents. So that's the gist of it. So today I want to focus on the Aussie dollar. Usually I look at all the different currencies, but I think the Aussie dollar is leading the way in this race to the bottom, in this sinking. So first, I want to show you a chart of the Aussie dollar versus the United States dollar. And this is 11-year low here. We're below 67. So that That means 1 Aussie dollar is worth 67 US cents. And this chart goes back a long way, early 90s. So you can see that we're not even close to the lows. The lows were reached sometime in 2001 below 50. And you can see the sharp drop here on this chart. That was in the crisis of '08 when the whole world economy came to a grinding halt. You can see that the Aussie dollar dropped from around 1, it was 1 to 60 to the US dollar. So it looks like the next target here could be 60. Is it going to go down there straight away? Probably not. Some people think that it will stabilize here. To me, looking at it technically, doesn't look very good. So the Aussie dollar still has a long way to go versus the US dollar. So it's held relatively well compared to the lows it had back in 2001 and also 2009. So for my Australian viewers, I know I've got quite a few people in Australia who watch my videos. What's the best thing to do? Well, a lot of you probably know it's to get gold and silver. So with that, seeing that I'm talking about Australia, I'm going to show you my 1 ounce kangaroo coin from Australia. You can see, very nice coin. This coin was actually sent to me by one of the viewers. Very nice donation. Silver, 1 ounce silver, Aussie dollar. And he was from the US, not from Australia though. And then another coin. This is one that's worth more, I guess, in fiat. It's one that I've had for many years. It's a Australian nugget, 1 ounce. It's from 1992, so it's an old Australian nugget. It's got a kangaroo on it as well. There you go. So that's how you can protect yourself. And you're going to see the chart of gold, how actually the XAU AUD, that's the foreign exchange cross symbol or mnemonic or ticker for the Aussie dollar, for gold, excuse me, in terms of Aussie dollar. We could turn this chart upside down, of course. It gives you a better idea how the Aussie dollar is sinking. I can tell you that this is at all-time highs at the price of gold in Aussie dollars. So what I'm trying to say here, the Aussie dollar has sunk a lot more versus gold than it has against the US dollar. That's why it's imperative, in my opinion, for people all around the world, if they want to hedge or protect their savings versus fiat currency inflation, they have to do it with precious metals and not the fiat US dollar or the Federal Reserve notes. So we can see here, we closed around 2,350 this last week. Back in 2011, gold all-time high in Aussie dollar was just below 1,900. So we've broken through that, and I think the Aussie dollar is leading the way. It's only a matter of time until all the other major currencies of the Western or OECD countries are going to follow suit. So there you go, the gold price in Aussie dollar. Aussie dollar, unfortunately, for my Australian viewers, sinking very quickly. Just an anecdotal story, or because in the UK, here in London, at least, there's a lot of people who have relatives in Australia. And I was speaking to a few of my friends at the golf club the other day, and one of them goes every year to see relatives in Australia. Spends 6 weeks there or so. And he was telling me how food is so much more expensive in Australia than in the UK. He told me that, for example, for him here and his wife, food shopping for a week is about £100, and his brother or I think it was his brother who lives there, was saying that for him, for two people in Australia, is 250 pounds, not dollars. So I think it's going to get worse, unfortunately. You're going to have what's called stagflation. You're going to see the cost of living continue to rise, unfortunately. And the other thing is that the Reserve Bank of Australia, of course, they're still very accommodative. They cut interest rates 3 times last year. You look at Australian interest rates, they're very low as well. The 10-year is almost down to 1%, the 10-year yield. So there's no protection in the fiat Aussie dollar. To finish off, just wanted to go through an article in the FT that I saw on the 7th of February, so this last Friday. The title is Australian dollar hits lowest level in nearly 11 years, as I said before from looking at the chart. Growth sensitive currency drops as coronavirus jeopardizes economic outlook. So let's go through this article quickly. The Australian dollar tumbled to its weakest level since the financial crisis as investors continue to weigh the impact of the coronavirus on economic growth in China, Australia's biggest trading partner. The currency, typically regarded as a proxy for Chinese economic growth, fell as much as 1% to 66.62 in New York. That's versus the dollar. Trade on Friday morning, the lowest level against the greenback since March 2009. Interesting that they don't talk about how the currency fell also against gold, which is the ultimate really currency or money. But it's the FT. Potential fallout from the coronavirus and the adverse impact it is likely to have on economic growth is the latest threat to Australia's growth outlook, which is also going to take a hit owing to a catastrophic bushfire season. The rapid spread of the disease has prompted countries all over the world to quarantine travels from China, while airlines have suspended flights to and from the mainland. Combined with the bushfires, that represents a threat to the health of the Australian tourism industry, which contributed about $61 billion to gross domestic product in 2018-2019. Concerns about the virus outweigh a surprisingly upbeat outlook on the Australian economy, which was provided by the country's central bank earlier on Friday in its closely followed quarterly statement on monetary policy. So there you go, the Aussie central bank behind the curve. I'm not going to go further into the article. I think the cost of living is going to keep rising. We might even have a recession or worse in Australia. I think Australia prides itself for not having had a recession since 1990. I think that's the statistic there. I'm not too sure. Before I finish though, just wanted to refer you to a very good YouTube channel from Australia. It's called Walk the World, Digital Finance Analytics. They've done great videos, not only about the Australian economy, the banking system, but also about the fact that the RBA keeps all of Australia's gold at the Bank of England, 80 tons or thereabouts. And why do they do that? Well, because the Bank of England and the bullion banks, they're involved in trying to suppress the price of gold. And I'm sure that they're busy doing that, trying to stop the Aussie dollar from falling further versus gold. And that's why they keep those 80 tons here in London instead of keeping them at home. I think the Aussie dollar would have sunk a lot quicker if they hadn't been intervening, probably. With that, I'm going to sign out. If you enjoyed this video, make sure you hit the like button. Think about subscribing if you haven't yet. Please share this video far and wide. And you can also follow me on Twitter, Facebook, BitChute, Steemit, and DTube. I wish you all a great rest of the day. Take care. Bye.